Good afternoon. You know, if anybody else, and if I had a smallest of an idea to create something in AI, I think I would have been the most fortunate guy sitting with these guys because they have all the money backing the AI venture. So before I jump on to a set of questions I've been given to present to them, I want each of you to tell us in very brief what you're doing and especially any AI ventures you're backing.
Hi, I'm Vikram Gupta. I run IvyCap Ventures. We do C to Series B. And for us, we invest across three themes. One is the India consumer and growth story. Second is deep tech and emerging tech. And that's where we invest in AI, deep tech, hardware, space tech, defense tech, and a lot of other such opportunities. And the third is India for the world. So we invest in Indian entrepreneurs catering to the global markets. Our ticket size is anywhere between 2 crores going up to 100 crores in a single check. We manage about 6,000 crores. We made about 75 investments across 3 funds. And now we are working on a fund 4, which is 2,500 crores in size.
Very impressive.
Hi, I'm Gowri Shankar, part of Antler India. We are an early stage VC firm. We typically back founders and startups pre-product and pre-revenue. Right, we're back close to 120 companies right now. With respect to AI, I would say we back companies across the stack, all the way from the model layer to the infra layer to the application layer. We have back companies that are vertical AI companies, horizontal AI companies, AI plus hardware, AI services, and also consumer AI, right? So looking at all aspects of AI.
Hi everyone, Karthik here. I run Peer Capital. Essentially, I've been investing in India tech for the last 15 plus years. Peer Capital is a new fund we started 4 years back. We are a seed-focused fund, and there are 2 sectors of focus for us, and one of those is applied AI. And contrary to Gowri's approach, we are kind of very niche and focused in applied AI. Also, we only look at commerce, entertainment, finance, and healthcare, and we only look at applications of AI in these areas. Largely building from India and potentially for the world, but largely we're looking at is there an India opportunity in some of these as well. So good to be here.
This is Saravanan from Premji Invest. I head tech, financial services and fintech investments for Premji. We have a wide range of mandate given the kind of capital that we have. From seed all the way to IPO, we can kind of like participate. Roughly manage about $16 billion across India and US, private and public market. India private equity has been dominated predominantly in growth stage investments. Of late, we are seeing a lot of interesting opportunities to go early, where technology-led disruptions kind of like create significant value. And that is one of the reasons we have started taking early bets, particularly where the theme is centered around deep tech and AI. And we are part of India Deep Tech Alliance also, original founding group, and have been thoughtfully incubating some interesting ideas where AI plays a central role in application as well as use case for dominant use in say financial services, consumer, or some of the sectors that may have major growth focus.
Hi everyone, my name is Ranjith Menon. I'm a partner at Chiratae Ventures. We're an early stage focused fund. We manage about $1.3 billion investing in India across the last 20 years. We expect about 30 to 40% of our capital going into AI outside of the other sectors that we focus on, but AI is a key big area for us. And within AI, applications is applied AI is an area that we are very focused on. Another area that we are currently very actively looking at is the physical AI piece, which basically marries both AI and hardware in it, and that's an area that we're currently looking at.
So I'm going to stay with you, Ranjith, and I have a government question for all of you before I come to the specifics. So the scenario right now is fast changing than ever before. You guys have decades of experience in investing, but I think what I'm hearing is that there's been no time like AI-backed investment scenario, which is so unpredictable, and also from the size of investment that most of the ventures seek. So give us a sense, of one AI venture that you backed or passed, which changed your investment ethos or thought process.
Yeah, sure. Maybe I will talk about something that we missed. There's this whole vibe coding piece that we are seeing companies like Emergent Rocket and a bunch of these guys that have come up. When we met some of these guys initially, it seemed like a small piece of a tool which the large foundation models could do themselves, right? And so we kind of said, okay, we'll wait and watch. But it's a category by itself. It's become a category by itself. And it's very interesting if you really think about, how technology, if there's any tool that can, bring down the skill gap drastically down, right? It completely opens up the demand side. It unlocks demand side very, very, unexpectedly. And that's really what's happened if you think about some of these companies, how the scale at which it has reached within short periods of time. So, that I think you should have been a little bit more open on that front.
Okay, go ahead. Just pass the mic. We'll continue with this question. Very quickly. I want it to be short because we've got a great set of questions. So let's keep it short. Yeah.
Yeah. So, as I mentioned, I had financial services, right? And I've seen companies which operate in a very, very traditional way for 0 to 1 or 1 to 100, right? But for the last 12, 18 months, I've been seeing how some of the interesting AI vendors are accelerating the journey for my own portfolio companies. And that is when I got very interested in seeing why can't we back some of these companies which are enabling the scale journey. One such bet we took in the insurance space, right? We backed a team which created the entire workflow and very fast way of underwriting for traditional insurers, right? That is interesting learning for me, and I'm seeing that this is going to open up a lot more opportunity for us when we apply this same philosophy from different subsegments within the financial services.
Great. Karthik.
Yeah, stories on both we missed and what we did, but I'll just stick to one. We invested in a company called Webless around 16 months back. But I think the learning curve for us also, along with the founders, has been just immense in terms of the speed at which things are evolving. The thesis with which we invested 16 months back, it started playing out, and maybe within 6 months they started making some revenue. But very quickly we realized that this is not sustainable. You need to really revamp the product and make it a lot more sustainable. Extended the team in the US, and now we are talking about the product roadmap, which is kind of in sync with how things are evolving in that space, but you're still catching up.
Yeah, we invested in a voice AI platform called Navana AI that powers voice calling for BFSI enterprises. I don't know if you've followed the news. Few months back, Bajaj Finserv.
You'll have to keep the mic close to
Oh, sorry. A few months back, Bajaj Finserv called out that they are powering several thousands of crores of loans being disbursed through voice AI. Navana's platform is a technology behind non-English, non-Hindi disbursements, right? You might be wondering, hey, in a very crowded space like voice AI, how can somebody build a very defensible company? I think Navana has thought through this full stack, right? They own the speech recognition models. They're building their own text-to-speech models, and they own the on-prem deployment, and they also own the application and the agentic layer, right? Now, this suddenly gives them SaaS type of margins, right? 80-85% gross margins, which is not possible if you're only operating at the inference and the application layer, right? So, I think the big thing that's shaping our thesis now, even in AI where defensibility is a question, your imagination is a limit on how you can build a defensible business.
Our recent two investments in HR tech, one company called TurboHire and the other one is called TrackCheck. And in this case, I think I first rejected, in fact, TurboHire because they were talking more about the algorithms. So they were trying to position themselves, differentiating themselves on the algorithms that they were building. But I think over time, as we tracked them, we realized that it was more outcomes-driven approach, and the model itself was learning based on the more data that they were generating, the more people they were interacting with, the more interviews they were conducting. And the same thing we noticed even in track check. So as they were taking more and more data into the system was learning more and more and creating better outcomes.
So actually, that's my next question. So give us a deeper sense of, when you recognize that there's a data mode that you've been able to identify rather than a very, a pitch which is more of a narrative rather than a real data mode that you've been able to identify. So go deeper on that part, Vikram.
Yeah, so this is one example, and there are a few more. In fact, we invested in a drug discovery AI company called LUC Data. And that's actually a very disruptive space from an AI perspective. And I think, again, there is science and there is also an outcomes-driven approach, because when you're actually discovering drugs, you have a disease in mind, you have a solution in mind. But if early on you're not able to identify the right leads and the right targets, you may end up wasting a lot of time during the process and may not get to the right drug candidates. So they were able to compress that by actually leveraging the data. And as more and more data was going into the system itself was able to learn. So this is one very interesting example where over time it was like an exponential learning curve, where if you, let's say, focus on just cancer drugs as an example, and in a particular cancer area, the system can actually learn one particular drug's application in that cancer area, and that's how the cancer is actually being treated by a particular drug if you use certain kind of situation with that particular molecule. So I think these are very interesting applications that we are seeing.
Very interesting. Gowri, I'm gonna, the question I'm gonna pose you is that tell us an early stage founder you backed for non-obvious reasons. You tend to sort of back. A lot of us are at a later stage, but early stage, which others missed, and what kind of outcomes you saw at a later date.
Yeah, this is an investment.
Your lessons to others, right?
Yeah, sure. Now, this is an investment that's yet to be publicly announced. This is also a first life sciences AI investment, right? Using AI to reimagine gene editing, right, for agricultural applications in India, right? The thing is very non-obvious because the founder does not have any biotech background. The founder does not have any biotech or life sciences background, right? His most recent experience was actually working in a farm in Assam, right? And he got interested while working in the farm. He got interested into thinking, hey, why can't we have better crops that provide better output, right? And ended up learning about gene editing completely on his own. Signed up for a course in Agriculture Research University in Coimbatore, which takes only PhDs or postdoctoral students. Managed to hustle his way into that, right? Completed a course in 6 to 8 weeks, and now probably got a doctorate in his team and a computational biologist from US, but wants to go after AI in agriculture. Completely non-obvious. I mean, the first time you meet a founder saying, how can somebody with no life sciences background think about taking on CRISPR, which is probably the most expensive gene editing platform with a patent regime, right? So AI makes the impossible happen.
Great. Karthik, I've got an opposite question. So something you passed which worked later, and what was the lesson you learned in specific? What was the error in judgment, or probably things changed later which left a learning for you? If there's an example like that.
No, there are many examples. So we make a lot of mistakes. So I think in the AI side itself, there are a couple of examples on the other side also, but just on the AI side, I think Ranjith was kind of pointing about this whole vibe coding space. We were just doing our review last year, and our team had come across and actually connected with Emergent in July 24. And they'd done some initial conversation. They're like, okay, not interesting, so let's just go ahead. There are too many players like this. And this was an outbound where it's like you're reaching out with an intent, but then you're saying, okay, this is not something that we'll look at. I think takeaway is, this is a constant learning game, and as a fund which is just started up, most critical for us to fix our processes to make sure that when there are some of these reach outs and conversations that happen, there's a lot more intent to those conversations, and we end up humbled by some of these instances. So a lot more rigor in our internal processes to make sure that when you're kind of reaching out, we mandate that any team member, if you have reached out to someone, we say that there is an SLA within which you have to go back with a no also, even if it's a no, and why a no. And there has to be a process followed inside the system to make sure that it's something, if something is interesting for 1, 2, 3 factors, and we define those factors as well, then it has to bubble up. So it's a lot of error of omission than commission, so which you need to avoid. So process flows are something that we need to fix. And we were just talking about AI and how do you use AI to make some of those decisions as you go forward, right? As early stage investors, at least my view is that you need to be contrarian to get to the best deals. So you can't just have an algorithm today decide where you will invest, at least today. Maybe things will evolve.
Well, most of you are very well experienced with decades of experience of investing. But what I'm hearing from our friends in the investment world is that AI is changing game for many because of the long-term conviction that you need to stay. And I've got a couple of questions following that. So my question to you is, anything that comes to your mind wherein it tested your conviction over a period of time with the kind of funding returns that you potentially look at?
AI itself is relatively new, right? And long-term conviction here could be as long as 6 months, 9 months, right? Okay. And that is what we have in front of us. But within that, if we can make some meaningful product market fit or an early traction, we should take quick bets to back. At the end of the day, it is very strong founder conviction, and also how well we see that the conviction translates into action in that limited period of time that we are seeing, right? It is very similar to, if I were to give an outlandish example, or rather a little bit out of line example, when the technology disruption happened in financial services, the whole fintech term got coined, right? But today, there's not a single company that can survive without deeply integrated technology. And I see that happening in 8 to 10 years. There may not be a single company, whether it is in the financial services or consumer, where AI is not deeply embedded, right? And some of the companies that we are backing in the AI space, the competition is not going to come from a peer. It is going to be the incumbents who will start adapting AI much stronger when the cost of implementation falls. I think those are the early checks that we can do in the limited period of time while taking bets and see how well they kind of scale up.
So, Ranjith, contrary to what I asked, him, I want to know if something which was probably a bet, but turned out to be more impactful in a short period of time, right? With revenue showing up faster than you expected it to. Anything comes to your mind?
I think, I'll get to name one company, Pixis. It's an AI company which we invested in a few years back, and we made the investment before AI became what it is today. They're largely focused on the marketing and the advertising side of the business today. Although there is very little hype on that company, but the fact that they have 700 customers at an enterprise level, I think they have the most, one of the most strongest MCP orchestration layer that they have built. I think some of these things, has created a huge impact. When we invested, because the investment thesis didn't cover for the fact that AI will become this big and all of that, because this was done a few years back. But the fact that the company and the founders have kind of made sure that they keep on track with what is happening across the world today, and have gone on to just not building the product, but really getting it adopted and implemented across large enterprises in the US, I think has a significant, strength to the fact that it is just not noise, but really value being created for customers using the platform.
Sure. So I'm going to stick with that. So because there's one part of technology or AI innovation, but really the meat remains in terms of its adaptability and deployment. So give us an example of company which actually presented itself as a AI first, but more than the AI innovation that you were seeing a kind of a large opportunity in terms of large business opportunity within that?
See, we see companies that presents itself as, AI and now more agentic and so on and so forth. But if you really dig deep, and I think this was a discussion on the panel earlier also where Karthik was there from 11 Labs, we see that there is, the tech layer is very thin, right? And there is a lot more human in the loop, right? And it is actually driven by human power than as much as is driven by AI. So I think we are seeing these kind of companies that turn up every day. And really the way we think about some of this is how over what period of time can we move from that continuum from being human in the loop to being driven more and more by AI. We've got a company which does insurance management, healthcare insurance management for hospitals, which is, when we started off was largely driven about 80-90% by human people behind. Today, we're close to almost 40-45%, which is human in the loop, and the rest is being done by AI. And this progression in the next 12 months will be moving more and more towards driven by agents. And so we're seeing that visibility, right? That's a classic case of when we met the company, it had a very thin layer of AI, and then over a period of time deepening it with processes, process understanding, and also the tech developing to
we've seen it across many technology innovations over last couple of decades. So Vikram, you want to add something where you saw a distribution playing a bigger role than the tech layer that Ranjith has spoken about. Any examples come to your mind?
Yeah, I think, and just to add to that as well, so there's an example of a company called Spectre.ai, which is predictive maintenance. So effectively in the factories, if you're one of the equipment or the machines goes down and you are not aware that it was going to go down, your entire factory comes down. So if you knew about that machine maybe in advance, then you would be able to address that and not bring your production down. So this is actually an AI first, but at the same time, very specific use case. Now, to answer to your question, there is a company called Miko, which is actually a robotics company. It's a companion robot for children. And interestingly, it's actually a consumer company, but over 90% of their business actually comes from the US markets. So it's a robot which actually has a very interesting AI software packed into it, and it basically communicates with the children, works with them, and it helps them in the learning. And it's also a common company with Chiratae and one of other investors. And what we've seen that the distribution channel that we're talking about in this particular case is basically when you have to launch in a completely unknown territory, like in the US market, in a consumer market. I think it's not that easy. Indian company with the tech hardware with the AI packed into it, launching into the US markets. So they were quite successful actually going through Walmart and the Costco's. And if you now enter into any Walmart or Costco store in the US, you will actually see a Miko sitting there. And that has happened because the founder actually spent a lot of time in the US market trying to understand the consumer play there. Despite the fact that a lot of Chinese products, a lot of other products in the market, one is the product itself is very good, but at the same time, it's a distribution play which is actually has to be played first before you actually are able to justify that a product can create value.
Interesting. So, Gowri, opposite of this, any consumer play or non-tech play wherein you saw AI pivot, which played out for its growth strategy?
No, I think we have seen many pivots, many pivots from our portfolio. In fact, the first ever AI investment we made was in 2022. Right, the company was building AI native creative generation tool for brands. Right, they want to build brand safe creatives, and the tech wasn't ready there, in the sense most of the image generation models and image editing models weren't ready. So the founders pivoted to building, now they're building a reasoning model, AI that builds AI, and they moved to SF and building in the model layer, killing it there. Another example, founder was an intern with Antler and moved on to build interface AI. They started off as interface AI, which is AI agents that do dispute resolution for e-commerce brands, right? They scale to 100K ARR, very quickly figure out that once an agent resolves a dispute, there isn't like a continuous recurring revenue on that. So you have to figure out a business that can keep growing. So they figured out brands and CPG brands have a lot more issues with managing their ERP implementation and stuff. So they pivoted into building AI agents that can manage application management services for SAP. Moved to the US and now they have a Fortune 100 customer who uses them for maintenance services. So it happens all the time.
Okay. So Karthik, give us a sense, if there's anything that you've invested in because of the AI cost, infra cost, computing cost, wherein you felt that we were not able to sustain that business. This is something which is very common in today's AI investments that we are seeing, that sometimes the cost just goes beyond what you anticipated. So give us a sense on that.
I can actually think of two examples in our portfolio. So one of them, essentially today, their compute cost and infra cost is roughly around 40% of their overall monthly burn. But I think the good part also in early stage, at the stage that we typically come in, is one, you're experimenting, so you're a little okay with some of these costs going a little high because you're looking at more outcome coming out. But secondly, there are also the ecosystem players, be it the AWS or even the Anthropic team now and Perplexity and some of these guys, being available to help the teams to utilize the technology in the right way and do some of the architecture reviews and help them to fine tune. We have one more company which is interesting. It has had multiple pivots and currently kind of creating animated microdrama and kind of building that content very quickly. They're seeing some very good interest from consumers. But one of the things that we are seeing is that in the next 2-3 months, the cost will bloat up. How do we make sure that it is within the cost and we're able to build it in a sustainable way? I don't have the answer to that. I only know the question right now, but hopefully we'll find answers in the next few months.
Sure. So that's my last specific question to you, Shaul. Any geopolitical regulation that you came across which changed your stance on AI investment?
So given the sector that I kind of like predominantly invest on, financial services, it's a heavily regulated one, right? And every use case, particularly using AI and data, is very, very closely scrutinized, right? Not getting into too much of detail, right? We invested in a company which is into housing finance. It's called People Home, which is an AI native housing finance company, right? There, front-end guy can kind of like do a video record in real time, modify what sort of question that needs to be asked, and based on the response on a real time can be verified and tutored, and then a quality of conversation and the quality of credit and everything can be rated real time based on all the things that is happening, and that it gets communicated to the company's pre-approved credit policy, and within like hour, right, a sanction can be kind of like given for a loan. That level of extreme kind of nimbleness can be brought into the underwriting process involving secured segment, which is unheard of in India, right? And if we do that well within the regulatory guardrails, it will be disruptive, right? But of course the if is very big if, right? And we should ensure that whether it is the kind of information or the kind of decisions that we are taking are well within kind of like that framework, and it applies to other sectors as well, right? Particularly when it involves data and other things. I think if people crack this, and it has to be done in my view, again going back to my previous comment, many of the companies will lose the right to exist 8 to 10 years down the line if they don't adapt these way of functioning. And someone like Bajaj Finance making a statement that FY27 is do or die year for me to implement AI tells you something, right? Basically, that is the direction that the whole people are doing, and they have to wear the regulatory and other kind of things on their sleeves and operate properly.
Okay. Before I take a closing remarks from them and my final questions, I'll probably be opening the floor for some questions. So we've got a question here. Please pose it to the speaker, introduce yourself, and be brief.
Hi, thanks for the insightful discussion. It was lovely today. So my name is Arun Kumar. I am the founder of Lattice Ocean. So I help brands improve their AI search visibility. So I have two similar questions. First one is to all of you. So how do you decide what is the right AI company to invest across various stages? For example, pre-revenue, seed, Series A, B, C, D. And second question is very specific to Mr. Gowri Shankar from Antler Partners. You mentioned, Gowri, you mentioned about investing in pre-revenue and idea-based companies. Given the vibe-coded nature of the world today, it is easier to come up with anything under a day. You don't even have to have an expertise to bring something out, at least in the initial stages. So I think it is very hard to invest in this kinds of companies which do not have a product market fit yet. So how do you decide which are the right companies to back?
I'll probably take the second question, especially when you don't have a product, when you don't have traction. On what basis do you actually decide to invest? I think most of our investing is over-indexed on the founder's ambition, the vision, the speed at which they want to move and build something, and some part of it is also on the thesis the founders have, right? Are they really going after a problem that has potential to become large? Nobody can predict upfront, but have they done their groundwork and uncovered a unique insight that can potentially unlock a massive opportunity, right? So that's what we over-index on, and the way we do that is to spend a lot of time with the founders, right? Usually maybe 4 or 5 meetings with founders and build the conviction before we commit to investing in them.
Yeah, I'll maybe take your first question.
One more question we'll take.
Sorry.
On the right.
Do you want to answer that? Okay. I think he had a first question.
Go ahead, sorry.
I'll keep it very brief. So, at a meta level, right? So, how do you take decisions? That was your question at the seed stage. So, at the seed early stages, there are meta level, there are team and market. That's what we look at. And I think before going into details of what we look at in all of those, the fundamental thing that we expect the founder also to know is the VC business runs on a 5 to 7 year time frame, and the VC is looking at, if I invest in this, can this give me a fund returner? That's as simple as that. If the founder is already kind of educated themselves on that, and you've already asked the question of what's your fund size, how much are you investing, can I give a pitch which will give you the convincing answer that if you invest X, this will return you the fund return in the next 5, 6, 7, 8 years. If you're able to kind of guide that discussion into that direction, then you have the years of the VC as well. And then it's more detail where you're looking at differentiation. Is the team committed? Is there a market space there? That's the second order part of it.
Very nice. We'll take that one, and if time permits, we'll take one more.
Oh, yeah. So I'm Rahul. So basically, we are discussing like how AI is very fast and resolving problems also. And now as an investor, if I ask you, today problem AI is resolving in those companies we are investing, but are we also seeing like what new problems will come up because of this AI? And these problems probably won't be a problem couple of years down the line. So by the time we are expecting returns on the investments, probably we will not get it, because that time it will be completely different problems we will face. And in this journey, do you really think investing in an AI company is valuable, or a company which is providing a SaaS plus service model, maybe a next level where you are not just giving a solution, a SaaS solution, because anybody will copy it. Now we are having tools which you can easily copy in a day. So along with SaaS, it's give a service also to retain the clients. So do you think that's a better model for the future?
Maybe I'll take a shot at this. What we will invest in will continue to kind of evolve. because the investment period in every fund is about 5 years. So within 5 years, a lot of things can change. But I'll give you a specific example of something that we've invested. We recently announced an investment in a company called Take Me to Space, which is setting up data centers in space, right? Because we believe that the data centers here will have significant challenges around energy, heat dissipation, and a bunch of these things. And so there is a very strong thought process of putting data centers in space, which can address some of these. As more and more people use AI and that adoption goes higher, usage of data centers and stuff will increase, and having that in space might be useful. So that's an example of something of we thinking not just at an application layer, but also futuristically as to if this thing scales, what else around it will be important and can make money. So that's an example of at least us thinking a little beyond just AI and applications.
Would you invest in a solo founder?
Very quickly, yeah.
Just
Go ahead.
Would you bet on a solo founder now that AI is playing the co-founder role?
Absolutely. I mean, I don't think anybody here will say, no, we don't back solo founders. Absolutely, no. We're looking for great guys who can build wonderful things and make a lot of money.
So thank you for...
I don't know whether you heard of a recent case where the AI product itself raised $10 million. It's not even a solo founder.
Thank you, sir, for so much insights. I think as you guys are talking about specific companies, how it is helping a wrong, good decision, that is quite insightful for us to as we move about. I am Hina Agarwal. I am currently working on creating people-first preventive healthcare platform for mental health. Now, I do want to understand at what stage you prefer founders that they should go to VCs and start talking about their ideas, their platform they have built. Is ideation is the right stage? Is MVP once they got the user base? What do you prefer goes right about, and what should be their strategy to move about? I understand different companies demand different perspective and stages. What should be the basic ideal strategy to move about?
So
It's a very unique question. I think you wouldn't have got this question before, huh?
No, each fund has a different stage that they invest in. So if you're going with a pure idea stage, you should go to someone like Gowri. But if you've got the business already running and you're looking at scale, they should go to Saravanan. So I think one of the first things is to do today, unlike maybe 10 years back, there are enough VC firms, enough pools of capital, which are all focusing on different things. So one thing I always urge every founder to do is, just like VCs are doing a diligence on why I should invest in someone, you should first do that homework of who should I reach out to and why should I reach out to them. That's one. But at a meta level, right? So it's always good to see if there are some connects, reach out and have those discussions, so that you're also not spending a lot of time on an area where there is possibly no interest at all. So that also helps. So if you know someone or if you have connected with someone, even if it's a late stage investor, it's always good to talk.
Excellent.
Yeah, not all companies need VC money either, right? So it is not that you have to, every company, every founder need to go raise VC capital, and it's okay to build by yourself also.
And there's a wealth of knowledge in any case, in any conversation, right? So we've got a wealth of knowledge sitting here, not just the wealth itself. So my last question, in last 3 to 4 years, what is one thought has changed in your investing in AI companies? So I'll go with you, Vikram, first.
So eventually, it's all about the problem you're solving, not the solution. I think it's many times the founders get married to the product or the solution that they're building. And I think, like the question that was asked there as well, that things are changing so fast. Yeah. And if you're very passionate about the problem you're solving, I think you'll figure out the solution. And solution will also evolve. You may also pivot over time. But if you're passionate about that problem that you're trying to solve, which is large enough to be solved, and there are not many people who are able to solve that problem. And if you can find the right solution over a period of time, I think that's one very important thing, is you can figure out very early on whether the founder is married to the solution or married to the problem. So I think that is one of the key learnings.
Very nicely put, yeah.
I think the one thing that has changed for us the most due to AI is the speed at which we make decisions, right? So we missed investing in smallest AI because we took a few more days to decide than we should have, right? So as much as we expect the AI founders to move fast, I think the VCs also need to move faster in the AI world, which is why we have redesigned a residency program, which is now just a 3 to 4 week program, give decisions to founders. The one thing that has not changed for us is also the fundamentals of good business building still remain the same. Doesn't matter whether it's AI or not AI, right? AI is a means to an end. So you have to identify the right problem and go with it, go build something that people want, right? So
very interesting.
So I think one thing, we started only 3-4 years back. So I think there's a lot of learnings in the last 4 years. But I think one thing would be in this AI first world, our pace of understanding and learning is a lot more critical than just being analyzing companies. Because today, anybody sitting in any corner of the world can actually crank up a competition for what you're investing in no time. So when you're trying to invest in something, our own understanding of the spaces has to match the pace. So to that extent, I think it's a lot steeper learning curve for investors, and we just need to be on top of our game as much as the founders.
Sure. I think for us, both our investments in the US, where we are very, very heavy on tech and AI investments, and in India, one thing that has really taught us that if we fail to disrupt or self-disrupt ourselves, whether it is fund or even our portfolio companies, somebody else from outside will come and kind of like change the game for us, right? Sooner we do this, even if it means at the cost of changing our own business models or changing our own style of operations, the better, so that we can kind of like have the right to exist, 8-10 years down the line. I might sound like a paranoid when I overuse this term, right to exist, but I genuinely feel that, that's the direction many of the traditional companies are kind of like going now. And if they don't adapt this smartly and change the way of their operation, it will kind of like impact them. And that we tell to many of our portfolio companies as well. And even in our own style of investments have dramatically changed from what it was 18-24 months back to what we are kind of like doing today.
Very valuable.
Yeah, I mean, I don't have anything other than to add about what all these guys have said. But on a lighter note, I mean, the world has changed so much in the last 3-4 weeks, right? And I think at least most of the VCs are sitting and wondering what is Anthropic going to drop, right, next week. That can disrupt a bunch of companies that we are either evaluating or already put money into. So I think it's super important to, when as founders also, to think not just in terms of technology, but really build something that can create value for your end consumer or our customer in the case of B2B, and not really focus so much on the piece of technology itself.
And wonderful. So I've learned a lot out of this panel and the kind of knowledge and experience that you guys bring in. So thank you very much for joining us at this AI Summit.